everyone, and welcome to Fun with Fitzy. We are still in Chapter 6, and this section is going to be 6.2. I've decided to break this section, source documents, into two videos to make it easier for you. Source documents typically take a little bit longer than other sections, and so we're going to take it accordingly. We know what source documents are already because we looked at it in a previous chapter, but we didn't look at them in depth. So that's what we're going to do now. A number of business transactions are started outside of the accounting department, and therefore the accounting department is informed of transactions by means of business papers that are sent to the accounting department. These are the source documents. A source document is a business paper that shows the nature of a transaction and provides all of the information needed to account for it properly. So if you think about a transaction, you need to know the date. You need to know all of the accounts that are affected and which ones you're going to debit and credit, and you need to know amounts. Source documents have all of that information on them. Almost every accounting entry is based on a source document. For some transactions, there are no conventional source documents. For example, if the owner takes money out for his personal use, there is no source document for that. So there must be some other supporting documentation to help with that. Usually that is a memorandum. We call them memo for short. The company is required to keep source documents on file for future reference, locating errors, etc. Source documents provide factual evidence to verify business transactions. Let's look at a list of them now. Here are typical source documents, and we're going to look at all of them, where I believe we're going to get as far as this one in this video, and then I'll do the remaining in the second part. Let's look at cash sales slips first. This is a cash sales slip, and it's easy to know because it actually says cash sales slip on it. Not all source documents actually have the name on them, so I'm going to show you a couple of indications on how we can tell. Okay? This cash sales slips indicates the sale of a good or service for cash. That's why it says cash and sale. So this one's quite easy. And for each source document, you should be able to identify what the journal entry should be. In this case, on March 4th, because that is the date on the source document, we made a sale. Assume that we are Masthead Marine in this case. That's the company we are doing the accounting for. Okay, and it's a cash sales slip. So that means we sold some merchandise. When you sell merchandise, and we'll learn this in chapter 11, that we're going to use an account called sales. It's basically a revenue account. So acts like revenue, it's a normal credit balance. We sold it for cash, so cash goes up, we debited cash. Remember, we indent our credits, and sales goes up and we credit sales. That was pretty straightforward. A sales invoice is similar to a cash sales slip. The only difference is it's on account. You didn't get cash right away. I'm going to encourage you to look at the terms when we're looking at source documents, because like I said before, the name of the source document isn't always on it. So if there's something in the terms, something like this, net 30 days or N30 or 2%, 10, and net 30, something like that. If there's something in there, it means it was on account. Okay, so we made a sale here for all of these items, and they're going to pay us in 30 days. The date of the transaction was March 5th. So let's look at that journal entry. Okay, sale of goods or services on account. So that journal entry, March 5th, right there, it was on account. They owe us the money, therefore it's an accounts receivable. And the customer is SS Boat Works, so that's how we know who the accounts receivable is, and it was sales. So we debit accounts receivable, credit sales for the full amount of the transaction. A point of sale summary. You are familiar with this because often when you go into a store and you make a purchase using your debit card, or in the future you'll be using either your MasterCard or your Visa, at the end of the day, they can print out from their point of sale machine a summary of what the sales were for the day. For example, here, you can see on October 30th, this company printed out their point of sale summary and for the day there was $743 worth of sales. Okay? The sale of goods through the cash register. And I'm going to be talking to you about Visa and MasterCard later on in grade 12, but generally we kind of treat those as cash sales, and debit cards are cash sales too. So here, for $743.18, we debited bank, because bank goes up, and our sales goes up, so we're going to credit sales. So far, so good. And then we'll move on. This is a purchase invoice. This means we purchase something. Okay? And you can tell, because we're Masthead Marine, the company whose actual name is part of the paper or the letterhead on the actual invoice itself is the company who's making the sale. So we know that we're purchasing in this case on March 6th, and we're purchasing chains and links and cogwheels and axle bearings. We're a marine company, so I'm assuming this is equipment for $241.50. So when we, and by the way, look at the terms again. This is how we know it's an invoice. We are agreeing to pay within 60 days. So this is on account. We owe the money, therefore it's going to be accounts payable. Purchase of goods on account. All right, journal entry. Again, March 6th, March 6th. It actually is equipment repair now that I look at it closely. They repaired equipment and they put in the number of hours. So this is what we did. We purchased some repairs for $241 and we owe the money. So therefore, accounts payable. So let's look at the purchase invoice a little more closely. The name of the vendor, so what is a vendor? A vendor is someone you buy something from. Okay, so the vendor is Coleman Boats, and this is a different example of a purchase invoice. There's usually a number on it, and that's for reference purposes. When you do your journal entry, you can put this invoice number as your explanation instead of a whole explanation. The date is there. Here's the terms that we talked about where you're going to owe the money in 60 days. Tells you what was purchased. And we're ignoring taxes for now because we're going to talk about taxes in a later section coming right up. And then the total number for the bill. Okay, and by the way, it's not GST and PST anymore, it's HST, and we're going to talk about that next. Here's the journal entry for this particular purchase. So we bought some posters from Coleman Boats. So we're going to call that an advertising expense. So advertising expense for $240. And we're going to owe the money later. So on account means accounts payable. And again, remember I told you can use this as your explanation. There we go. Okay, so this is going to be a short break in between parts 1 and parts 2 of source documents. And we'll continue on soon.